Welcome everyone to this week's edition of the Commercial Real Estate 101 Meetup Group. For those of you guys who are tuning in for the first time, we actually host this every other week, and we invite speakers to come in to talk about a variety of different topics to pertain to commercial real estate. And today's topic is actually kind of ancillary or close to commercial real estate, but a lot of our same clientele obviously are business owners. And today we have Ellie Puckett to be able to talk a little bit about business sales, which is, I think, a very pertinent topic and one that I think is going to be quite interesting. So Ellie, welcome.
Thank you. Thank you for having me on. I'm so excited to be here.
Absolutely. And did I say your last name correctly? Is it Ellie Puckett? Is that correct?
Yeah, you got it right. Yep.
I always like to clarify because my name can be kind of tough sometimes to say.
Absolutely. Yeah.
So I always like to clarify that. But no, welcome to the show. For those of you guys who don't know, Ellie's actually local here. She helps business owners sell their businesses, and I'm sure she's dealt, and her and her business partner have dealt with a variety of different industries, all different types of businesses. So I think it's going to be quite interesting to hear the conversation that stems from this. So, but before we get started into that conversation, if you don't mind kind of sharing a little bit about yourself, I think that'd be great.
Yeah. So I came to business sales relatively recently. The first 10 years of my career were spent in technology startups. And I had a degree in entrepreneurship and kind of fell into the world of angel and venture capital. I helped found a space tech company, and we raised a little bit of money. And then I actually from there went into entrepreneurial support, but it was mostly focused on these like high growth, high scale businesses that raised angel and venture. And we started teaching lots of people how to start businesses. But we kind of stayed focused on this one style, which tended to be a lot of technology and software-based businesses. And eventually I started having this recurring question that came up, which was like, the angel investors didn't make their money on startups. Like, yes, some of them do, but that's like very rare. Most of them made their money on regular businesses. And then the angel money was just the fun part. That was the really high risk, high reward. And I had the opportunity of watching one of these angel investors actually do an acquisition deal. And it just like lit my life on fire. And I was like, I intended to be an entrepreneur. I've fallen into the world of technology startups, which are incredibly unstable, and ended up learning that there was this other path that was extremely strategic. Acquisition entrepreneurship is a lot less risky. You can acquire your job. So I got very passionate about it and started looking at buying a business. And in that journey to buy, which I am currently still on the buying journey, I actually met my now business partner. And I offered on one of his businesses that was for sale. And that particular deal fell through. It wasn't my now business partner's fault or my fault, or even the business owner's fault. It was a third party. But that experience led me to learning just so much about acquisition entrepreneurship that my now business partner asked me if I'd be interested in selling businesses. And it's been a wonderful journey. I have a podcast called Renegade Ventures, and we specifically dive into the process of buying, building, and selling businesses as assets. And so here we are. And I help business owners, transition their business. And I also can help strategic buyers as well, but we mostly help business owners sell.
Yeah, no, and that's a good point. And again, as commercial real estate, just to give you some context on the people who listen, I mean, we have a lot of commercial real estate professionals that are listening. We have people all in the industry of commercial real estate, and so a lot of the clientele that we service are business owners. And I've definitely had several interactions in the past with clients that had a business on site that they wanted to either sell and also sell the real estate, or sometimes they wanted to continue to operate their business and do like a sale and lease back where they would just sell the building, sign a long-term lease, and then ultimately operate on site. So, these types of conversations are not uncommon in the commercial real estate space. So that's why I thought it would be great for us to kind of just talk a little bit about that. So as far as the sales or the sales process is concerned, can you kind of describe what exactly you would say is the process of selling a business? Because, there are certain types of businesses that I'm sure are primed to be able to sell, and there's probably others that are, depending on how they're structured, may or may not be as fruitful. So if you could share a little bit of insight in that front, I think it'd be great.
Yeah. So The number one thing that we're looking for to make a business sellable is that it is profitable. In the small business land, it isn't, it is purely based on your EBITDA or your seller's discretionary earnings. And so how well the business has actually been functioning really plays into that. So we would meet with a business owner that's interested in selling their business, and we would probably start, number one, just learning about their operations. Do they have managers in place? Who, how many employees do they have? The general structure of what they do, what they sell, how they make their money. And from there, we can normally tell, like, does this business function pretty well or not? And then we move them into the conversation about a valuation and their financials. How profitable are they? At this point, if they're interested in kind of coming up with that number is, we enter into a broker to potential seller non-disclosure agreement, and we collect their tax returns. And so the whole first part, yes, we're asking if they're interested or if they own their real estate or if they're interested in selling it. But the majority of what we are evaluating is the goodwill portion of the business. And the other types of assets other than real estate. Do they have machinery or equipment? So on and so forth. So we get these tax returns, we understand, how profitable are they? And then we take them through that process of the valuation. And in that process, we're allowed to add things back to that net line. And what is allowed back, it depends on the business and how well it has been documented. But we can normally add back like one owner's salary and really clearly personal expenses, like that law firm didn't need a boat. We can carve that out and add that back. And so we start working through this. We come up with a number that we present to the business owner. And if we agree on that number of the sale price, then we might enter into a listing agreement. Somewhere in there, we do talk about the real estate and whether or not it will go with the business or if they're leasing it back. And in here, we actually kind of get in our first blip or the crossover between our worlds, especially if they're selling the real estate and the real estate is worth more than the business itself. And so we can kind of dive into that in a second, but we get a listing agreement, it gets listed, but unlike you all, we do not have like an MLS equivalent. We have lots of different places that these businesses can be listed, but they are listed without any of their identifying information. So it'll say something like automobile distributor or, car lot. Or it would say, I have one that's dental handpiece repair. And so it doesn't necessarily identify who they are, just generally the industry. And then we, get interested buyers. We let our strategic buyers that we know that might be interested, we contact them and we walk through that process of sharing a confidential information memorandum, NDAs, and seeing if anyone wants to move to the next step. This whole process from like beginning to end can be 9 to 12 months, can be longer. And it is really focused on the business itself and its function and whether or not the buyer and seller are a good fit for each other. And whether or not it's bankable. And so we go from like an offer to due diligence, and due diligence is like our version of an inspection, but it's on the business itself and its books, and then into a purchase agreement, working with banks, and eventually, hopefully, a close. So.
Yeah, that's great. Yeah, and as far as the the process is concerned, the steps obviously are slightly different when it comes to business sales, but the nuances are different. But as far as the steps are concerned, it's somewhat similar to what we do on the investment sales side. Where we get share confidential information. The one caveat that you've mentioned is you typically don't want to share addresses. You typically don't want to share refined information regarding the business, because you don't want to let managers know or employees know that the business may be for sale, because of obviously the implications of them finding out and then deciding that they want to jump ship, and that could potentially cause issues. So there's obviously a lot more nuance when it comes to selling a business, because there's so many more moving parts that need to be considered.
Right. Yeah. And, almost always the business owner is less worried about their building. They want the money for it, but they're worried about their employees and the other version, the other pieces of the business.
No, 100%. No, I couldn't agree more. And I appreciate you sharing that context, because I think it is interesting to hear the corollaries and also understand some of the differences involved in that. So one of the things you had alluded to is scenarios whereby, because this is a common theme that I've had, where I've had like 2 or 3 clients that this has been the case. They own the building. They've operated maybe a restaurant on site for quite some time, but they themselves have been the operators. It's kind of they've been in business for quite some time, and it's been somewhat profitable to maybe decently profitable, but they're kind of the intellectual property that comes along with the enterprise. And so in those scenarios, I guess, are there conversations that are typically had with the business owner? Because that's one of the things that, is kind of a hard conversation to have sometimes, is kind of talking to the business owner about what, their business may be worth. Maybe in their mind, they're thinking, oh, I'm generating whatever income I'm generating. But when it comes to replicating that with a new buyer, maybe that's not as achievable. So if you could share some insights on that, I think that'd be great.
Yeah, this happens all the time. And I would say it happens, the smaller the business, the more it happens. Where the version of what they think the business is worth is not even close to the reality. A lot of people think it's a multiple of their revenue, and in fact, it's a multiple of their net. And so we run into this pretty regularly. And so one of the things that I often tell people in the preparation is, like, I would get a valuation before you're ready to sell, so that you can make the changes that you need to make beforehand. And then the other thing, if we're already at that stage, is if you are still the secret sauce of your business, like if the business hinges on you, we don't have very much to sell, because you are the thing that is leaving. And so making sure that, like, in the process of getting ready, that they start documenting standard operating procedures, and they start, working a manager into more of a leadership role, so that a buyer actually has something to buy. And in the cases where it's like a restaurant person and they just still have the building, the cash flow, especially if the cash flow isn't there, often it makes more sense to sell the building with a commercial realtor than it actually does to sell the business. And that's really hard feedback to give a business owner, because they feel like they've spent a lot of time and energy building this thing, and it's meant a lot. And one of the things I've been saying recently to some of them is, like, just because you can't sell it doesn't mean that it wasn't still valuable. It still provided a good life for you and your family. It put your kids through college. It did whatever that business did for you. It gave you a lot of years of income. It's just not gonna sell because you're still the secret sauce, or you don't have the cash flow, or you took cash out of the business and I can't count it. There's lots of things that can cause something to not really be a sellable business.
No, that makes complete sense. And you kind of alluded to a few of those topics. So one of the things I guess I'm kind of curious about is, let's say that, you've interacted with a business owner and you're wanting to get an understanding of what their business looks like. They provide you with all the proper information. As far as advising them, so let's say that they're like, hey, I want to maximize the value that I can achieve from the sale from this business. Do you typically advise them on different things that they could potentially do to kind of increase the delta to where they want to get to, essentially? And what are some of those, points that you make to kind of get them on that trajectory?
Yeah, there are. And I do a valuation package. It's really not expensive. It's like $2,500. And it comes with, like, a valuation of your business and a little bit of minor consulting or, like, direction on next steps. And the goal there is to help people, like, 3 to 5 years before they're ready to sell. There are some value drivers. There's a famous book And of course, the moment I'm trying to say it, it's gone. But there's a brand called Value Drivers, and they have 8 value drivers, but they're kind of obvious if we start talking about them. And so one thing is, how reliant is that business on you? The less reliant the business is on you, the more valuable your business is. Because a new buyer could be an investor. You have many more buyers to choose from. It could be an investor. It could be someone who wants to own and operate it. But also it shows that it is a well-oiled machine and it can produce those results for someone else. And so that is one of those big areas. Really clean books and records. If your books are messy, if you have 2 sets of books, if you've never used an accountant before, all of those things are red flags to buyers and will devalue your business. So it's like clean books and records don't necessarily add tons of value, but bad books and records devalue. And then so systems and processes, books and records, recurring revenue tends to be one of those value driving things. Some businesses just can't have it. A value builder is like many different clients, not having too big of a customer concentration, versus having like 75% of your business be this one entity. Well, that's a pretty big risk for a buyer if that one entity backs out. And so if you really start thinking about some of the functions of put buyer's hat on and saying, I'm about to spend $1 million, I'm going to sign on a loan. I need to make sure that this thing is going to exist in a year. How do we make sure that it's still existing and then growing beyond that? And so things that de-risk that investment make a business worth more.
That's great advice. And that's something that, I try to do on a regular basis with, clients, is to always put your buyer's hat on, because at the end of the day, these are the questions they're going to ask you. So if you can preemptively get in front of it and say, look, we're already addressing all the different concerns that a buyer may have. And that's where someone like you comes in who already have seen the process many times. And it's like, oh, well, these are the type of questions that we get asked all the time. It doesn't really matter, the industry. I mean, obviously there's probably specific things within different industries that may be asked more so than others, but there are probably quite a few different repetitive things that you can follow that if you do in fact address the concerns, then you maximize the value of whatever you're trying to sell. In this case, let's say a business. So, I appreciate the feedback on that front, and we'll have to get that book, recommendation.
Give me just a second and I'll tell you what it is. It'll come to me.
No worries. No, I'm just curious to hear about that. So, I guess, one of the things that I'm kind of curious about is, in your experience, and obviously you and Philip is your business partner as well, and he's been in the business for quite some time. I actually had a chance to interact with him in the past. We ultimately couldn't get a deal done on a daycare that I had listed, but he's a great individual as well. Yeah. So, as far as interactions with commercial real estate professionals and referral sources, that's one of the things that I'm kind of curious about, is because, in my case, if I have a business owner that wants to sell their business, a lot of times, unless it's something that I think could have some value, like, a lot of times it's like maybe a restaurant owner that didn't have a very successful restaurant, and maybe it's just, the real estate's really where the value is. But in a scenario where there is some value there, but maybe, it's not necessarily in my wheelhouse, like what type of things would you recommend as far as, for real estate professionals to be able to kind of, hand off those opportunities?
Yeah. I mean, with real estate professionals, if commercial realtors, you're going to be more equipped than, say, someone who mostly does residential. And I'm sure there are people who do a little bit of both, but because you understand the level of confidentiality, we regularly will see a residential realtor like post a business for sale, and it'll have its address, and then the management and employees will find out that it is for sale, and then they will quit and go find new jobs. And it basically completely devalues the business. The confidentiality part is just so high when a business is on the line. And so that function and understanding how that works and how you manage this whole process is, if you are really trying to sell the business and not just the real estate, I highly recommend working with someone. You will get a fee. You could probably sell the real estate part and still get the entirety of the real estate if you're working with someone reasonable or something of that nature. But the business aspect of it, it needs somebody who can do evaluation, who understands market comps and has access to the basic softwares of understanding what other comps are, who can put a package together. And so if you have a business that's worth more than its value of its real estate, it's probably time to talk to someone that is a broker and co-work that deal, or hand it off and just take a referral fee. Because there is just enough difference that it can get hairy quickly. Especially when you're talking about, like, is it going to be an asset sale or a stock sale? Is it going to, the way in which the transfer happens, not allowing a buyer to talk to management too soon, managing the interactions between those people. It is so much more heated than when it's just a piece of property. Because people's lives are in the middle. And so the emotions are just a lot higher, and you can accidentally really screw someone's business up if it gets out or any of those kinds of things.
Yeah, the confidentiality piece is huge. And that's, where I think it's important to understand that. And I appreciate you sharing regarding the sharing the address and all these other pertinent pieces of information that shouldn't be disclosed. I mean, luckily on the commercial real estate side, we a lot of commercial real estate professionals tend to handle that on a regular basis because we have, in particular in the investment sales side, where you're dealing with, buildings that have occupants, whether they're tenants, like residential tenants or commercial tenants. A lot of times you just got to be cognizant about, how are you interacting? Like we typically don't allow the buyers to interact with the tenants until we get to a certain point of the transaction where, it's somewhat certain, because that could stir up a lot of issues if, you start getting in there.
You can start looking for a new place to go. So exactly.
Oh, absolutely. Yeah. It could create a big mess of things to occur. And obviously we have, ways to be able to, get the information that maybe you need as a buyer, but it's not going to require you to get on site and, stir the pot. Cause sometimes the buyers like inadvertently say something that they shouldn't say, and it can cause an issue. And again, that's why having someone in the middle to kind of facilitate that transaction is so important. So I appreciate you sharing that information.
And there's absolutely ways that business brokers and intermediaries and transaction specialists can work with real estate agents, commercial real estate brokers, to see through a deal together. And in a lot of ways, that's probably best, especially if the real estate part is really big, because while have to have a license to do certain parts, right? I would not consider myself equipped to just go do commercial real estate. It is definitely where that line kind of gets drawn, is like, I'll sell real estate if it's coming with the business, right? But I will not be selling real estate unless it is really about the business part. And often we still are having people go get appraisals from other people because that's not my specialty. So
no, that makes sense. Yeah. And a lot of times, like you had mentioned, the way the businesses are structured, a lot of times there may be a holding company that owns the real estate, and then you have your own operating company, and the operating company leases the building. And, at some point, if you decide that there's value to be able to sell entities separately, I mean, again, it's all about the analysis, but I appreciate the feedback there. So as far as resources are concerned, obviously, how did you kind of get accustomed to learning about some of these techniques and getting more comfortable with the idea of selling a business? Is it like a program that you went through, or is it something that just comes with practice?
Yeah, so I am with Murphy Business Sales, which is a franchised business brokerage that has offices, 140 offices, I think, across the country, and was able to get training on the business portion through that. There is absolutely other courses that are available that you would not have to be a part of a brokerage. What is weird about this is it is not as regulated in many places as being a real estate agent or broker. In some states, you have to be a business broker, you have to be a real estate broker. In Kentucky, that is not the case. And so it just depends on where you're at, as to how the rules work and how lenient they are for business brokers versus real estate brokers. In Florida, you have to be, a broker. You have to be a licensed real estate broker to be able to sell a business, but there isn't necessarily a requirement for more education on top of that. So it gets really state by state on how the laws work. But I would recommend training to anyone who wants to get into the business game, because you will need to know how to do, at a minimum, a broker opinion of value. And you will need to understand kind of the nuances of how the interactions work and how it flows through that pipeline, because it is just slightly different. And some of those differences can make all the difference. I need a new word, but yeah.
No, I couldn't agree more. I mean, obviously, the analysis piece is a huge part of it. Is you don't want to ever misrepresent someone because you don't clearly understand what the value add opportunities are, what the current business is worth based on their existing financials. Like if you forget to add an item in that could potentially, cause the value of the business to not be quite where it needs to be as far as what you're advertising. And so, I feel like having that level of training to be able to do that is an important piece. And it's kind of surprising to hear you say that in certain states it's not required as far as, from a regulation standpoint, because, you guys oftentimes deal with more nuance in a lot of ways,
Yes, it is ridiculous. So like, I would check to see, if the brokers that you're working with, if they were trained or not trained, or just being careful about that, because some places really there isn't a requirement. And then some people assume that CPAs can do valuations, and all of the CPAs will likely say that they can. And yet there is a difference between CPA's valuation and whether or not they know that market, and whether or not they know, like, just because they come to a number doesn't mean that number is based in real market comps or reality of how the world is currently functioning in the buyer's tests or the debt coverage ratio. I feel like oftentimes CPAs will lead their clients to believe a business is maybe worth a little bit more than it actually is going to go for. And so then we're battling the fact that they are licensed CPA and I am not, but the world is more nuanced and they're not daily seeing what types of businesses are selling. A restaurant might be worth, 1.8 to 3x its seller discretionary earnings. But if it's not going to sell for that, then it's not worth that. So.
Exactly. I mean, literally the conversations I have almost every day with different people, because they say, oh, this professional or my attorney or accountant or something have commented and this is what they think it could work. And I was like, well, we look at the market every day. Like I know what things are selling for, and I know the hurdles that you may or may not face in getting this sold. And I can tell you that based on what we're seeing, that may not be realistic. This happens a lot sometimes with like our land sales, where people say, oh, well, that land down the street sold for 400 an acre or 300 an acre. And it's like, well, that land down the street is zoned a certain way. It has, easy access. It has sewers. It has all these other things that your land doesn't have. And yeah, granted, it may be somewhat close to where you're at, but you don't have the right zoning. You have, issues behind you because now you have a residential community in the rear. So if you try to get a rezone, maybe they're going to have something to say. So the likelihood of you getting what you need to get in order to maximize the value is probably going to be slim, because you're going to have a lot of pushback. So, there's a lot of nuance involved that a lot of people don't think. They just see it at face value based on what an opinion from a reputable professional. I'm not saying that, CPAs or attorneys or any other professional like that is not reputable and they have a high level of skill. But, if you're not looking at the market every single day, oftentimes you just don't know. So,
yeah. I can do my own bookkeeping, but you don't necessarily want me doing a, corporation's bookkeeping, right? Mm-hmm. Like, and it's kind of the same, like I understand all the financials in the way that I manage them for people, but
Mhm.
you also don't necessarily want me doing that role. And it's kind of the same way in this direction as well. So,
Absolutely. Yeah. No, I couldn't agree more. So what I wanted to do is we're live right now, so I wanted to give us some time to be able to ask questions to Ellie as well. So if you guys are on the Zoom chat, please type away. For those of you guys who are watching live as well, please feel free to type away in the chat box as well. So in the meantime, one thing I wanted to ask you, is there a particular question or anything in particular that you feel you wish I would have asked you about, the business sales process?
no, but I like to kind of beat the drum, especially for people that are in commercial real estate. You've maybe never actually thought about being a buyer of a business, and you've seen real estate as this asset that grows over time. And if you are, especially if you're renting it, you kind of already have the basics of what like buying businesses looks like. It's just often the cash flow from a business can be a lot more sexy than actually people realize. It's just like we've been told and taught in financial spaces about real estate investing. And that's because real estate investing has been a really sexy, lucrative thing, especially if you got started back in like 08 to 12, right?
Mhm.
Now it can be a little hard. And I have a good example. I have a business owner who has owned her property for like 30 years. And so the property is now worth more than what the business can sell for to cash flow that particular mortgage. But a lot of businesses that maybe don't have even their real estate attached, or that do, actually, cash flow really well and can grow in a way that is a really good investment. So just kind of beating the drum that if you've not looked at business buying as an investment opportunity, to take a look, because you're already like halfway there, and understanding how it works.
100%. And also, and we have a few questions in the comments. I just want to make a quick comment, and maybe you can reassure this as well. I mean, we're in a period of existence where we have a massive sect of the population that has, owned their enterprise for quite some time. Obviously, the baby boomers are starting to retire. If you can correct me if I'm wrong, but I imagine that the transition plan for a lot of these enterprises is going to be an interesting thing to see over the next 10 to 20 years. I mean, we're probably going to see a lot more businesses come available for sale that are very profitable and could be potentially great opportunities. And, so there may be opportunities available in the next 10 years.
Yeah, there is absolutely a transition happening. The bigger businesses, so we kind of have this like the smaller businesses, the tiny ones, they might sell, they might go out of business. The middle section can be like wealth generators for the average human beings, and grow and continue. The big ones, or like we're still talking about small businesses even when I say big ones, but like above $1 million in EBITDA, their private equity is coming down lower and lower and lower, because they want more and more deals. But one thing that I worry about as a human being is that I want more human beings owning their businesses and their communities, because they care about their employees and the communities that they serve more so than conglomerates of private equity, right? So like they might still end up being a small business, but if they're owned by private equity that has 15 shareholders, is it really a small business anymore? Because it's been disconnected from the business owner. And so that's kind of my personal lean. It doesn't mean that I don't sell to private equity all day, every day. We'll take the money, but it's one of those things that if you've ever considered getting into this game, even with a small number of people, like in doing like mini private equity, I think that it's worth looking at, because we do have more businesses that are coming for sale, but often aren't hitting they're going really fast because we actually still have a lot of buyers. But I personally would like to see lots of these businesses transition to people who still own them in their communities.
Sure. It's great call to action. So The first question, which was actually a direct message to me, I'll ask it real quick. So, regarding commissions, obviously in real estate, there's no set commissions, but oftentimes you'll see people charge anywhere between like 4 to 6% of the sales price as far as a commission. But I don't know if what is it typically in the business sales side?
It ranges even more
I'm
in
sure.
our world because there isn't necessarily a standard. What we do most often, it can be as much as 12 on the first million, 12%. But here in Louisville, we're normally at 10% on the first $1 million, and then it drops to 8% on the second million, 6% on the third, and 4% on the fourth, and 2% after that. And that's of sale price. So that we are paid on commission at the point of sale. And so a lot of that functions the same. Oftentimes we will take a down payment up front because we do a lot of work and to make sure that people are really serious about selling their business. But other than that, that's kind of generally how it works. I'm not saying that we don't get negotiated. And there are times where that becomes a flat fee. And sometimes that can bite us in the tail. And then sometimes, that's totally fine. But that's in general our starting point.
Yeah, we're same like in there's no standard or set commission in real estate. It's actually illegal to say it's set. So as far as what we have is like you may have a range. Some people say this is what we typically charge, and from there you kind of determine what you want to do. But it's kind of good to at least have that context. So
and we have a minimum. So our minimum
Mhm.
is 15,000. And it it just takes a lot of effort. Like,
oh, I get it.
that 15,000, even that's $150,000 business. So like if you're not worth at least that, like then you really have to decide whether or not you want to sell it through a broker.
Mm-hmm. Yeah, 100%. So Phil, he asks, what is a reasonable amount of time to evaluate a business, assuming the sellers have at least decent books and corporate structuring?
To buy, well, I would say the most advanced buyers, so there's a spectrum here, but the most advanced buyers move very, very quickly to letter of intent. And that is because they can normally lock down a period of time to do the due diligence and work through kind of the details of what would let them walk away. So there's no reason why you can't walk away during due diligence. And so they move very quickly kind of through the crap and try to figure out what is the offer that works best for this owner. What will they take on the money end so that they're not spending a lot of their time and money determining and doing the due diligence portion unless they know that they can come to a middle ground on how much they're willing to pay for it. So they go straight into the books and pretty much look at it from a financial perspective only, get in an LOI and move forward. We will see LOIs happen, especially on bigger businesses, before they've even met an owner, because the market is so aggressive right now that if you move across that 1 million in EBITDA line, we're going to have 3 offers in the first 48 hours, like without a doubt.
No, 100%. So yeah, you get to the LOI stage, and then from there you have a period of time to be able to kind of formalize everything, and then you
and that period
purchase.
is normally like 45 to
Mhm.
60 days. You might have 90 days on a bigger, more complicated, like if there's a multi-entity structure and a lot to sort, then you might get into the 90, but normally it's that short period of time. The thing that people don't realize is the bank doesn't move that fast. So your due diligence period to say you're in or out might be faster than the bank's period, but you will be kind of locked in after your due diligence is done.
Yeah. Great point.
It'll cost you money to back out at that point.
Yeah, for sure. So one question I have for you is related to the financing piece. Is it still active on the financing end? Or are banks' appetite still pretty active? Because I know on the commercial real estate side, we're starting to see a little bit of a pullback in certain property types and different types of investments. So I don't know if it's been affected on your guys' end at all.
That is the same here. If it has its property, then it's easier to collateralize. If it does a high EBITDA, a bank's going to do it. but we do get into issues with some of the smaller deals that don't cash flow as well. However, the past, like, I have a deal that's working through what I would have considered one of the more traditionally conservative lenders. And they are getting it through pretty easily, and it's under $200,000. It's not done, so I don't want to jinx it, but everything's going well at the moment. And it was at like a 8.3 maybe percent interest rate fixed, which is unheard of. Most of our SBA lending is prime plus 2.25, prime plus 2.5, variable rate, 10-year. So to have a flat rate under 11% basically is like, we're winning.
That's awesome.
Yeah.
Well, that's great. That's good to hear. Cause I would say in our end, it's definitely been affected a little bit, but I would see the next 12 months or so to 24 months, we'll start seeing some improvement in that area for sure.
It's been affected by the interest rate because a business has to really cash flow well now to be able to support their loan.
Definitely.
Yeah,
for sure. All right. Well, any other questions we have for Ellie? I want to make sure that you guys get all the questions answered. Checking on Facebook real quick as well.
And I'll add while you check that here's another one of those differences about real estate investing versus business investing is that the business's loan is largely based on how well the business cash flows. And so it's a little bit less about the individual buyer. Don't get me wrong, the buyer still needs to be a worthy buyer. But when I went to go buy a house, it was based on my income. And this is largely based on the business's income. And so the business is expected to pay back its loan, not the person buying it. That doesn't mean that you won't have to collateralize your home or some other asset, but it does mean that it's the business's cash flow has to cover the loan. The person does not.
Yeah, the same in commercial real estate investing.
Okay.
We have similar where it's like the asset itself has to service the debt, not necessarily the owner. And, if they need to cross collateralize over other assets that you own, or, if they have to use some of your other business income to cover their debt service ratios or whatever else, maybe they will. But oftentimes they'll want to make sure that just the asset itself has that potential. Or if it currently can't do it, is there a path of progress to get there within a reasonable amount of time? So.
Same. So again, you all are just so close to it's very similar.
That's awesome. Well, it looks like you've answered all the questions, Ellie. So first off, I just want to thank you for your time. It was really, I thought we had a phenomenal conversation, and I'm looking forward to hearing the feedback on this episode. So if you want to get in contact with you, what's the best way to be able to do so?
Yeah. So if my business brokerage email is e.puckett, Puckett @murphybusiness.com. I also am on social media at renegade.ellie. And I have a podcast called Renegade Ventures, and it's on all the major podcast platforms. So it is aimed mostly at women, but I'll tell you that we're still at like a good 30 to 40% of our listeners are men, and you are more than welcome here. At the Renegade Ventures, we are just trying to make it a little more inclusive of people who haven't learned about this before.
Absolutely. And we do have some, I'm committed as well to try to see if we can improve some of the diversity here in the commercial real estate industry, because it is kind of, as you mentioned, somewhat similar, and I'm sure in business sales. So, I think.
I'm like the youngest / one of the only females probably in like a 400-mile radius,
That's funny. Well, hopefully your efforts are going to help change that. And I'm looking forward to continue to engage with you and your podcast, and excited to hear what your future holds. And we'll include all that information in the show notes. So if you guys are watching this on YouTube, go ahead down to the description and access that. Or if you guys will listen to this in a podcast format, again, the same thing, go to the description as well. So Ellie, again, thank you so much for your time. For all of you who are listening, keep coming back, keep continuing to engage. We do these every other week, and we invite speakers to talk about a variety of different commercial real estate topics. So thanks again so much for tuning in, and we'll see you all next time.